Welcome back. I'm going to be showing you a clip of one of our live language of markets sessions that we did earlier this week, but I wanted to do a small intro first. I want to talk about what I want you to get out of this. I thought it was useful and what I am trying to get across here. And so we do a lot of lessons and teaching and practices in the live sessions, but when the market's active or there's opportunity somewhere, I like to take what I'm teaching, to take the lessons and actually ground it in a live moving market so I can demonstrate the various lessons that we've been working, right? So we can ground it. It's a lot different when we're talking about it and just practicing it than when it's live and it's moving. So we need to ground it. And so I take opportunities to do that, and that's what we did. The market was moving, and so we grabbed a live market and we ran through some of the things we have been learning. So what I want to get across is that you can take any market, any time frame, and by understanding a little bit of market structure, okay, a little bit about the principles of price flow, this will give us a way to quickly get acclimated to any market and then follow the process of that market. Follow it up, follow it down, follow it sideways, whichever way, as well as then trade that market, applying discipline and consistency to it. That's what method, management, and mindset is. Trading can be relaxed. You follow it up, you follow it down. You trade when appropriate. I want to get across that trading can be a different experience. You don't have to be able to predict the market or figure it out or worry about it or try to be right at every turn or wondering where it's going to go. All you need to do is follow it and process. And when that process doesn't complete, you abandon it and you follow the next process, right? So we just need a way to structure what looks like chaos here, follow that structure, and then apply our methods with discipline and consistency. So I describe some of that as we go along in the video. Now, you don't need my particular methods. There's nothing special in my methods. What you do need is consistency and discipline and a way to view and perceive markets, right? You need to have some method that you understand, could be any method, that is based in, price flow, and then follow it out and do that in a very disciplined and consistent manner. So just to recap, we need a way to view markets to make sense of what we're seeing, and then from there, follow it, and then from there, trade when appropriate. We don't have to wonder, we don't have to try to figure it out. And this provides us with a different experience of trading. It can be more relaxed. And I described some of this in the 100-bar exercise in a previous blog, but pay special attention to the way in this live market that we're going to be watching, and the way I follow it up, abandon that when it's time, abandon a setup that might be showing up because it doesn't show up, and then when it turns, right, I then follow it down. So I'm changing with change. And when that changes again, I don't get stuck and attached, and I change with that. That's what a trader's job is. It's learning to change with change. The market is like life. It changes. The better we can follow it, not get stuck, not force what we think should happen, follow it, and then apply our methods, then you're becoming a trader. When you can let go, follow it down, let go, follow it up, let go, follow it down, follow it up, and not be jacked around by your emotions. All right, one last thing. In a video like this, it looks easy. I make it look easy. I don't want any misconceptions about that. Trading can be easy, but mostly it's very, very difficult because we have us to deal with. Learning from me is difficult because I'm going to set right out to destroy all of your fantasies and dreams about whatever people think trading is. I want to get to reality. And mostly we have to learn how to lose. And this isn't an easy task. I lose a lot. These methods I'm teaching, they're 35% win rate on these particular methods here. We lose a lot, but with proper money management and understanding our trading comes from a series of trades, we do pretty good. So don't think you're just going to jump in, get this, and rock and roll with it. If you do, great. But mostly, there has to be a period of learning how to lose, learning how to be balanced with stops and with wins. So that way we don't have a distorted perception of what we're doing in the first place. All right, so let's get to it. All right, let's do a little bit of training. Welcome to the Language of Markets live session. It is Fed Day, the 14th, Wednesday. Welcome back. Good to see everybody. All right, let's see what we're going to train in today. Let's go do some work. Fed Day, not much going on. Drop them, come back. Let's check out the little tick chart and see what they're doing. So I'll come over here. I'll put 100 bars. 100 bars is a cycle. Pick any cycle you want. So I go like this in my cycle. Right? This is about structuring a market. Okay, so that's my cycle. And so anytime I come to any market, anywhere, it doesn't matter. It doesn't take me a whole lot to get acclimated to what's going on, right? Between the cycle and then market structure, I think we'll start today with a little bit of a market structure lesson. Just a reminder. But we don't have to figure it out. Fed, Schmed, who cares about the Fed? All we do day to day is follow the market up and down. And on top of that, we're even building out a long-term portfolio that will follow the market year in and year out with good risk controls. So right here, I'm acclimated. I look, first thing, what's the market doing? Well, it's in a range. It's not going anywhere. Next thing I do is swings. A new high confirms a new low. So I've picked my frame. Oh, look, I got a high. And I got a low, but nothing confirms, right? So all I have right now is this. And inside that, I have another high, and I have another low. And look at that, nothing confirms. So what are we in? What did I say from the beginning? Range or contraction, right? Contraction. I know exactly. I don't get excited at the bars. It takes me 10 seconds. I know where I'm at in the market. I know this little swing tried to make a new low. Couldn't do it, right? It's bouncing. I know that it's trying to make a swing, which is going to have a shelf component that I can watch. Zoom, test, zoom, retest. Okay, so now I have a major new high and a minor new high. And I can even go down one more swing. And all I'm doing is taking the reaction leg. So now I have a market that is swinging. Now compare that to the normal experience of trying to figure out what a market is doing and going back over all the time frames. And most places say you have to use multiple time frames and you have to do. I have just cracked the code. That's easy. I'm acclimated. Next step Say, so what? Okay, I know which way the market's going. It's going up, right? New major swing high, new minor swing high, it's going up. So what? Well, now I have patterns that I can trade. So I have setups. On top of that, I have exact how I'm going to get in, entry, where I'm going to put my stop, how I'm going to manage, and where I'm going to exit. So there's a lot I just said in there, but you see it all happens in 10 seconds when you train in it. 10 seconds. Have you been watching the market and going like this and wondering if it's going to do this and wondering if it's going to do that and if it's going to do this from yesterday or if it's going to fill the gap or is it going to roll over or that's a lot different than this. And so there's a reason we use market structure. And market structure isn't just some, see, now we even lose this swing. Now, this is our major. So in our frame, so on a tick chart, this is all going to move fast. This is now our major and this is our minor. And so I will follow this with the minors and I'll follow it with the majors. And when it changes, I'll change. And so there's a reason we use market structure. Market structure is not just some fancy technical word with a definition. It is literally putting form and structure around something that's chaotic, right? And in this case, the market is chaotic. So we put form around it so that we can make sense of it through all of the jiggles and the wiggles. And so then when I'm experiencing a market, right, my experience of a market, we all experience different no matter what we encounter. But I'm trying to get mine, yours, the markets, I'm trying to get our experience the same as the market's experience. Here's what I see. I see swing. I see little swing, even tinier swings. That's all I'm seeing is swings. I'm seeing waves. This is just energy moving. Nothing fancy about it. I'm just seeing waves. And so since I'm just seeing waves, the market is nothing that's big and scary to me. Most of the time traders come to the market, they're scared to death because they've been beaten up. The market's not scary at all. It's very easy. I just demonstrated it. Some of you guys been here with me for many years of market structure lessons and training. So I just demonstrated how easy it is to see, understand, and then even get to where we're trading the market. So I'll have a technique that I've honed for trading. And that technique will involve a try trade or a swap trade that will have rules. 10 bars, so I don't do anything. But I understand that, okay, we're going little, 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 and now we're starting to grow up a little bit from these guys. Maybe we want to grow up to this guy. Who knows? Yeah, it's pretty close, right? That's what we did. We grew up from the little guys into the big guy there. And maybe we can even develop some kind of a method on that. Now we're growing. So now we understand what we did was we're doing a deeper pullback. A, B, C. Maybe we're growing into the major. We're expanding. So that's the beauty. And we're following. I'm not going to force a trade, but okay, we're about like that. We've just expanded from little. We ABC'd. Remember I said the shelf will often capture the B? And now I follow. I'm not going to force it. And this is also the beauty of what we do and why we use market structure, because we're interested in what is, right? Reality, not what your back flipping Spider-Man system says it should do, or your moving averages, or your divergences, or your MACDs, or your GAN, or your Elliott wave, or blah, blah, blah. We're interested in reality, what is. We trade this way, not what we think, not what we want, not what we hope, not what we fear. And so that's the training. We don't actually trade that way all the time, but that's the training. And so we know in this position, okay, we're expanding. It could keep going. This is why we have a rule that says don't go making up a trade here and just jumping. We have a rule that says, all right, we need a bump now. At some point, if it keeps going, then we'll flip with it. And so that's market structure. We'll just keep following it. Now, I'm also going to follow, by the way, I'm going to follow the waves down. Okay, so this one is about this is what we'll call the last swing broke in this case, and we'll follow that wave on down. So I'm losing my major now, which is okay, but I can ask a 4-year-old which way is the market going. It's still going up. So we're following the waves on down now. And this is the facts jack. It's making this size swing or so to the downside. A new low confirms, new high. So I'll balance that and I'll measure it. We're getting a little deep for it to be a expanded swing. And so now we're coming into more of a, possible mountain territory. And now we're getting into mountain. So it's obviously not an expand. And so even though this is a pretty fast tick chart, right, these bars are happening every what, 20 seconds? It's not throwing us at all, is it? I can even go down to a little bit of more of a micro level. So, look at that. We have an outside bar here. And I can mark that. I can see that this was the shelf that they tossed them off of, and they're making steadily lower lows. I know when they go up, this is the area they got to mess with here. And so now, guess what? It's going down. I'm going down. So now I went from looking for longs to looking for shorts. It's going down. I'm going down. Heck, we can speed this up if you want. We can do a 396 tick chart. Now we're moving. Okay, I'm just looking for shorts because it's going down, I'm going down. I'm watching swings. And, balance swings is a way for me to see, okay, this is what's happening for real every X amount. And that has just now changed. See? So I know that that has just now changed. Okay, so I'm liable to be growing up into a bigger swing. So I'm waiting for a pullback and maybe a bump gift. But I know that it's just now changed, and now we're into discover territory, right? Are we just coming down here to make a bigger one? And all along the way, I'm going to see impulse, shelf, right? So now I'm going to look at the component level of a swing, right? I'm going to see impulse. I'm going to see the shelf components. You know, here we have a pivot component for sure. And if this thing zooms, we'll have a pivot component here too. Zoom, right? Why does it zoom? Hold, 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 boom, right? If watch the water, not the fish, right? If we know where the stops and we know where the people are and we know when they have to run, how many people went jumping on this thing? How many people went jumping short on this bar as it lands into the shelf of just a swing? This is just a swing, right? See it working the shelves. Now it's got to deal with this shelf. And so the majority of traders, even the so-called professionals, they're trading emotionally. No plan, no nothing. So if we were doing a trade, we're doing a try trade right in here, and we're in with a stop up at the high, right? So we followed the swings. If we were doing a try trade, we're in with a stop at the high. That's the expand. If you flip it, you can see it looks like this. Expand, bump, gift. And so now it's trying. We don't know what it will do. And then once it hits the top, we take a stop and keep watching. Maybe it's a bigger ABC. We don't know yet. And if you do this during the day, the next level of thinking, right, you're going to be thinking in, say, R multiples, risk units. If you do this during the day, what you're going to find is you're not going to be right on every single trade. I'm just putting the shelves back in. You're going to find, well, okay, I get stopped, I get stopped, I guess I win, I get stopped, but my win is going to be 5-1, and my stops are only going to be 1 risk unit. So that's a risk unit, right? And then 5-1 is down here, so I'm risking 1 to make 5 units. So you'll find I get stopped, I win, I get stopped, I win, I get stopped 3-4 times, I win once in a while. Not even most of the time, once in a while. And so here, out of this frame now, I'm starting to make a valley and starting to think about possible longs. So you can see it's no big deal about being wrong. I'm not going to freak out over it. I'm not going to change my whole method. I'm not going to go looking. I took a trade that was going down. It was going down. It was a good trade. Boom, I executed it well. So now the market's going up and now I'm going long. So we started long, we went short, we got stopped, and now we're going long. That easy. Now I'm watching it impulse. I'm waiting for it to shelve, start to swing, and that's market structure. All right, so you guys get this, right? It's kind of even this is very fast. I don't recommend anybody trade this, you know, especially on a busy day. These bars, look, they're clicking every 5, 10 seconds, 2 seconds, right? This is a fast moving chart here. But we're doing it with ease, aren't we? And notice I'm not worried, oh my God, I missed the run. I should have known it was a bottom. Well, you're not Miss Chloe. You don't know. You're not a fortune teller. She was a fortune teller. Okay, we're pulling back. We've got a little bit of an expansion here. We'll see if it does more. And so, I can do lessons while we're watching it. The chart will cooperate. All right, so now we're expanding a little deeper. And, don't forget to do your swing work. We're going to have major swing, which is the biggest swing in your frame. And we're going to have minor swing, which is the next one. So now we're obviously bumping and check the bars. 18. Looks like we're going to get just enough bars maybe. We'll get our order queued anyways. 19. Okay, now we're at 20. So we have our order queued up. And that's it. Doesn't matter, win, lose, or draw. We've done enough practice to say, right, you know what, the numbers win over time. The numbers win over a series of trades. Get a little curious about the swing. Same size. Interesting. Same size as the minor. All right, since we don't close, we get filled. And what's next? 2 to 1, we go to break even, hit the low, and we get another stop. So that's what fast trading looks like. Right? And we're just working off of what? Shelves, shelves. So now we just wait for 2 to 1 to hit. And if you want, you can dance, right? You can maybe hurry up. Okay, so now we move to BE. Okay, now what do we wait for next? Well, that was quick. 4 to 1. You guys better be moving your orders. We moved to 2 to 1. What do we wait for next? Dance, dance, dance. Get a little ants in your pants here. Come on, hit me, hit me, hit me, hit me, hit me. Come on, jump around, close your eyes. Oh, squirm. That's it. Thank you. Thank you, Grace. Squirm, squirm. Oh, look, quadruple tops. You're like, oh, the market always does this to me. Always. It's going to come back and get me. Yeah, I knew it. Always happens. One tick. I quit. I can never win. Well, come on. Or maybe I should jump out now. Hmm? I think we're hit. Filled? No, no, not yet. Come on. We're filled. Say win. Close it. That's it, right? So what have we done? How many of you guys were like, oh my God, we took a try stop. And what do? We followed it from look at what we actually did. We followed it from range to going up to not getting a trade to getting short and getting stopped to getting long and dancing around a little bit and a win. So right off the bat, for, I don't know, what did it take us? 25 minutes. So we're up 4 hours and 25 minutes. So anyways, so did you guys see how relaxing it was? And of course, right? You don't always win. I might get 3 stops in a row. You don't know. You don't know. And then you follow it. But what I want you to note is how smoothly we have shifted from long to short to long to short. And not only did we orient ourselves to the chart with market structure, we applied a trade to that. And a trade that has us up 4R for the day so far. So we didn't just follow the market blithely. We took action when action was there to be taken in a very structured and methodical way so that our emotions don't drag us all over the place. And make no mistake, right? When I talk frame, that's part of our market structure. Frame is a cycle. It's like the seasons. The seasons are a cycle. Night and day is a cycle. So when I'm talking frame, I'm talking 100-bar cycle. It's not that there's anything special about 100 bars. Pick something that sounds reasonable and then follow that cycle up and down consistently.